Okay, great. Thank you all so much for joining us. We are ready to get started now. I am Tijuana Clifton, Marketing Communications Manager at the South Carolina MBDA Business Center. It is a pleasure to have you here joining us today. I will be the moderator of today's event, and that means I will be manning the chat room, gathering your questions, and making sure they get answered. So as we go through the presentation, please put your questions in the Q&A box, and I'll make sure that we get to them at the end of the session. Now, before we begin, I'd like to introduce Camille Shaw. Camille is the director of the South Carolina MBDA Business Center. Camille?
Thank you, Tijuana. Good afternoon, everyone, and thank you so much for joining today's PPP Workshop. My name is Camille Shaw, and I am the Project Director for the South Carolina MBDA Business Center, which is operated by DITSA. Before we begin, let me give you a quick overview of our center. The South Carolina MBDA Business Center is funded by the U.S. Department of Commerce Minority Business Development Agency. Our center works with minority-owned businesses throughout the state to help them scale up and build capacity. We serve as strategic consultants to help small business grow to the next level and to meet the challenges of today's business climate. Last year, we assisted our clients with procuring over $33 million in contracts and $53 million in finances. That brings us back to why we're here today. Prior to the pandemic, there were over 243,000 minority-owned firms in the states of South Carolina and North Carolina. We understand that several of you were left out of the first round of PPP CARES funding. There were various challenges with minority businesses with accessing the PPP last year. We understand that many of you may have closed during the spring due to business restrictions or city shutdowns. That is why we make this effort to make sure that you have the support you need, the information that you need, so that all eligible businesses may access this funding for the overall sustainability of your business, jobs, and the economy. So before we begin, I would like to thank our partners for joining us with this effort to share the information with you. And our partners include the SBA, U.S. Small Business Administration, the City of Columbia, Office of Business Opportunities, OPTUS Bank, and Burkett. So thank you again for joining, and we hope this workshop will be beneficial to your business. At this time, I will turn the program back over to Tijuana, our moderator, so that she can carry on with the program. Thank you.
Thank you, Camille. Now let's go ahead and get started as we have a lot of ground to cover today. But before we do, I do have a quick question. I would like for you to put in the chat box how many people have received the PPP loan in round one. If you received the PPP loan in round one, please indicate so in the chat box. Now, let's go ahead. Our first presentation is going to be a bit of a tag team by SBA and Burkett CPAs. A day or so ago, the SBA made a significant update to the PPP program, and we thought this would be the best way to bring the information to you, basically to combine forces. So I'm going to begin by introducing Mr. Gregg White. Mr. White is the District Director of the SBA's South District Office. He graduated from Clemson University with a bachelor's degree in administrative management. He has been in lending for over 35 years in both the private and public sectors. He has owned a real estate firm, construction, tax service, rental service, as well as a landscaping and plant business. So he definitely knows the system from the administrative standpoint as well as the business owner standpoint. Today, we will also have Mr. Daniel Crowson. Mr. Crowson is the executive vice president of Burkett, and Burkett. He is a certified public accountant who specializes in providing tax, accounting, consulting, and compliance services to individuals and closely held businesses. Daniel is a graduate of the University of South Carolina, where he received his bachelor's and master's degrees. He keeps abreast of changes that pertain to PPP and other SBA programs that impact the small business, so he can bring the most recent and relevant information to small businesses like you. So with that, I'm going to turn it over to Gregg and Daniel. You guys can take it away.
Camille and Tawana, thank you very much. This is Gregg White with the Small Business Administration. I want to thank y'all for participating today. First of all, I'll kind of give you a brief overview about SBA. First, we have 4 categories which we cover for the small businesses. We provide counseling to small business, contracting. We oversee the contracting area for small businesses. In South Carolina last year, we did about $6 billion in SAB, $1 billion in federal contracts in South Carolina for small businesses. We provide capital for small businesses through our different funding programs. And then the last, which is what we're here today to talk about, is really the disaster relief programs that we have, which includes your PPP and your EIDL loans, as far as some of the other programs which we are in the process of doing it, like this, the Shutter Venue Operator Grant, which is in process right now. Next slide, please. This last round of PPP, which we're in the process of working on right now, Congress wanted to make sure that a lot of the underserved areas, underserved small businesses, including women, minorities, and veterans, and rural areas, did get first shot at the funding. So what happened with this is it was initially opened to submission from community financial institutions, which provided this service to these underserved communities. And the other thing we looked at was the program. We have a strong lender match program where lenders look for applicants on a site. It's kind of a match program. It's like a dating game almost. You put in your application, the lender is out there looking at it all the time, and they match you up with that. And we expanded that for this program also. And then we provided training materials and assistance with our lenders and with our own SBA staff to provide that to the underserved areas. Next slide, please. Kind of give you a time frame. Last week, January 11th, PPP opened up for the first draw. These are the applicants who had not applied for a PPP loan in the past through community financial institution. It was opened up then for these smaller institutions. And I want to emphasize something. The PPP loan is actually a forgivable loan. Some people may call it a grant, some people may want to call it a loan, but it is a loan that is forgivable, 100% guaranteed by the SBA if the proper documentation is provided to the lender for the forgiveness application once that's done. So that was done on January 11th and opened up to the first draw PPP loans for community financial institution. On January the 13th, for the second draw program, which is borrowers that had a first draw SBA PPP loan, it was opened up for a second draw to those who felt like they needed additional funding, and we'll go through the criteria for that in a few minutes. On January the 15th, it opened up both for the first and second draw to lending institutions with $1 billion or less. And then on January 19th, it opened up both first and second draw for other participating lenders. A key note here today is to look at the date of March the 31st, 2021. Applications, all PPP applications, whether it was a first draw or second draw, must be submitted by that date. We don't have any legislation by Congress. We can't look into Congress's mind, read what they're going to do in the future. But right now, our deadline for applications is March the 31st. Next slide, please. What is a first draw PPP loan? It's for an eligible applicant that did not receive a PPP loan prior to August 8th. So that's what you qualify for. It includes some additional type of entities, which we'll cover in a minute. Some covered eligible expenses are expanded that were not covered under previous. Now you can select a coverage week between 8 and 24 weeks after the disbursement of the funds to use your proceeds. And certain borrowers may request an increase at original PPP loan amount. That is a very tight window of who can do that. Originally applies to mainly some farmers, seasonal businesses, etc. But very, very limited window for that. But again, you must apply only before March the 31st until Congress makes some different appropriations. Next slide, please. Go ahead, Daniel.
Greg, I'll mention back on that slide just to point a couple of things out from a practice standpoint. First draw PPP loans, just keep in mind, as Greg mentioned and pointed out already, if you have not received the PPP loan back in 2020 when the first round came available, this first draw is for you. So you can go back and get this money. And this applies to, depending on what type of tax entity that you are. If you're an LLC that's filing as a Schedule C filer, single member LLC, you can go get the first draw money. Partnerships, S corporations, C corps, all are going to be eligible for this first draw. And we'll talk about some very selective provisions that were placed in for second draw, but those are not going to apply on the first draw. So just make you aware that for those folks that did not receive money in 2020, this first draw is for you. When we talk about covered eligible expenses as they're listed on the slide, I just want to make mention, just to boil this down to a very basic level, that's covered eligible expenses is what the dollars can be spent on, not the maximum loan amount. The loan amount is based off of wages or salaries that are going to be paid. There's calculations based off of payroll tax filings for Form 941. You can also look to your W-2s and W-3s to do those calculations. You just have to take into account any pre-tax items that may come into play. One question that's already been submitted that I've already seen, how to Schedule C filers, how are they even eligible for this if they have no employees? Schedule C is based on self-employment income, things of that nature. That's going to drive the maximum amount of dollars that are eligible for loan. When we talk about covered eligible expenses being expanded, though, I just want to mention this, Greg, real quick. That's based on what the dollars can be used for. So we know in the original PPP passage, you could use your money for payroll coverage during a certain covered period. You could use it for mortgage interest, lease expense, things of that nature. That has now been expanded. Okay, your payroll now can include things like group life insurance, disability, vision, dental. Again, this doesn't affect the maximum loan dollar amount, but it does affect what you can spend those dollars on. And I just want to mention too, on the additional expenses, it's going to cover things like cover operational expenses, which is going to be business software, cloud computing services, covered property damage. So if you suffered damage due to public disturbances in 2020, that's now covered under PPP. You've got some covered supplier costs and then worker protection expenses. So if you've got different COVID type implementation, those are going to be your expanded coverage costs that the dollars can be used for after you've calculated your maximum loan amount.
Daniel.
Yes.
My goal really is to hold questions until the end, but I too am seeing a couple of questions come through that I would like for you to go ahead and address now. And both of them are around the 1099. Someone from the Blue Ribbon Taxi Company said that, can our independent contractors apply for PPP? Another person indicated that using 1099s, she was turned down. The bank told her not to even apply. Can you address that before we move further?
I can, and Greg, you can jump in. We'll address the 1099 question as far as the applicant goes for the maximum loan amount. So if I own a small business or a business in general, the 1099s for which I'm issuing, so people that I'm paying, does not play into my maximum loan amount. So I can't add my 1099 contract employees into my calculation for my maximum loan amount. So I've got to use either my self-employment income or my wages paid through W-2s for maximum loan amount. I think that answers the second question. What was the first one again?
It was pretty much the same thing. She said she has, or she or he said they had 1099s as their income because they are independent contractors, and the bank told them not to apply. So it sounds like if you receive 1099s, then you can apply for the PPP.
If you're a recipient of a 1099 and filing on whatever method, Schedule C, partnership, yes, they'll use that income to then go through their calculation based on the way they're taxed.
Okay,
So,
excellent.
Dan, and let me jump in here. That's just look at them in like a sole proprietorship. A 1099 pretty much is an independent contractor operating on their own independently. So yes, they could apply.
Yeah. And the reason I mention that is just because you receive a 1099, you could be an S Corp, and that S Corp has to pay wages to you, the employee owner. So if you just receive a 1099 doesn't make you eligible. Once you receive it, then it flows into the type entity. But going back to what Gregg said, if you're a Schedule C sole proprietor, the recipient of that 1099 is going to help drive potentially income subject to self-employment tax on your Schedule C. That's what you apply with.
I want to ask one more question before we move forward. Daniel, what fed, and you too, Gregg, what fed that thought that if you were a independent contractor, why were people thinking that they could not apply for PPP and was largely left out of the process?
I really couldn't answer that because I really don't think there's any issue from beginning of the PPP program. Independent contract sole proprietors were eligible to apply for PPP. So I'm not sure where that came from, except possibly some lenders may not want to deal with it because of the smaller loan amount or that aspect of it. But that would be my only guess. But I have no reason to see why they would not be able to apply. Yeah,
let me mention, so when the CARES Act was passed, Schedule C filers were not included in the calculation for loan amount. You had to have payroll to get it. It took a later SBA guidance release, which if you look at the beginning of Gregg's slides, it mentions all the different releases as of dates. That's because this thing's kind of evolved since the passage. I mean, we're in the middle of a crisis. So the idea was get the money out. We'll figure out the rules after the fact. So Schedule C filers who received 1099s were grafted in after the fact to base their loan not on wages paid, but self-employment tax, which is why partners of partnerships had the same problem. They didn't have a W-2 to calculate their funding. We had plenty where the banks wouldn't take it on the front end because it wasn't in the original ruling. Then once we received later guidance that allowed them to be essentially grafted in and receive the loan amounts, that's what brought them back into play. And I don't know if that answers your question, Tijuana, but that's what we saw from our end.
It does. Thank you so much. And we can proceed, Gregg.
Thank you, Tijuana. Next slide, please. Some of the new eligible entities that are eligible for the PPP loan now for both the PPP1 and the PPP2. Housing cooperatives are now included, destination marketing organizations, 501c6s, which is your Chamber of Commerce eligibility, and certain news organizations are now eligible. And as Daniel was mentioning, business entities, partnership corporations, LLCs, sole proprietorships, 501c3s, 501c19s, and tribal businesses were included in the new legislation for the previous PPP1. So that's still in effect. The good one that we've had a lot of interest in was the 501c6s and destination marketing organizations. Had a lot of inquiries on that as far as new applicants. Dan, you got any comments?
Yeah, I'll just mention that the newly eligible entities, I mean, it's a pretty tight definition for a lot of these. I mean, the destination marketing organizations, Tijuana and I have discussed that a little bit. I mean, that's going to be nonprofits, and Gregg, tell me if I'm correct on this, that are basically promoting travel to certain places. So those are going to be pretty tight definitions, but I totally agree with Gregg. The 501c6 was a big play for those folks to now be eligible for PPP first draw money.
Okay. Next slide, please. For a second draw loan, it's a little bit different qualifications as far as applying for your dollar amount. The PPP1, the maximum loan amount was $10 million and the maximum employees were 500 employees or more. Under the PPP2, the second draw, you must have less than 300 employees and suffered a reduction of 25% in gross receipts. And gross receipts is something I know we'll talk about in a minute, Dan, but as long as you realize that the gross receipts does not include any of the PPP funds or EIDL funds, that's pretty much anything else above and beyond that is considered a gross receipt. For most borrowers, the maximum loan of second draw is 2.5 times your 2019 or 2020 payroll costs up to $2 million. And for borrowers in the accommodation and food service, which is your NAICS code of 72, your maximum loan amount is 3.5 times the average monthly 2019 or 2020 payroll cost. That's different than what it was before because you did not have the NAICS 72 code in there. Your second draw loans must submit the application through a different form, and I will go ahead and indicate this. There are a lot of new forms out there as far as the PPP1 and PPP2 loan applications. They're there. The loan applications are submitted to your lenders. You can get those applications online at sba.gov, but it's there and you work through your lenders for the PPP1 and the PPP2. Daniel, got some comments?
Yeah, if I'm pointing out anything on the slide, I think super important, and Gregg's going to hit this on the next slide as well, is just keep in mind, it says at the top, this is for borrowers that previously received a PPP loan. So you either had to have received, to get the second draw, a first loan in 2020, or you had to have received the first draw before you can receive a second draw, which based on timing looks like it's going to be pretty impossible to get both unless this thing gets extended. And as Gregg mentioned, we can't read Congress's mind. I don't think anyone can, right? So we'll see if that actually happens. When we talk about a 25% reduction in gross receipts, we're looking at quarter over quarter. So you're looking at quarters in 2020 versus quarters in 19. And I'll just mention for the good of the group, if you weren't in business for all of 19 or not 19 at all, but you were in business as of February 15th, 2020, there are very specific rules for how you meet this reduction in gross receipts. So I will mention as well that, the definition of gross receipts, it just mentions it's in when we look at the guidance released by SBA, it's in accordance with the entity's accounting method. So, are you using cash method, accrual? But when we look at what can be submitted for the 25% reduction, SBA is very clear. You can submit either quarterly financial statements, which by my count, there's going to be a lot of companies, especially smaller companies, that can't produce that. But they also say you can produce bank statements, and you've got to identify on those bank statements if it's not clearly listed what is revenue of the company. So what's capital contributions. Hopefully you haven't mixed in any personal type activity into your bank statements, but you can use your bank statements. If you can't produce either of those, or if it makes it easier, you also can use your 2019 tax return and compare it to your 2020 tax return. Now, I'm a tax professional, so you may be thinking, I don't have a 2020 return. Well, again, the IFRs released by SBA are very clear. You've got to go through and essentially draft what your return would look like and have it put on the forms and have that submitted to the banks. Gregg, do you agree with me on that?
Definitely agree with you on that.
Yeah.
Let me ask a quick question here, guys, because I have several questions about the 25%, but this is the gist of the question. Do they have to be quarter for quarter, like first quarter or second quarter reduction 2019 versus second quarter reduction in 2020? And also, can they show an annual 25% reduction overall for 2019 and 2020, or does it have to be quarterly?
It's based upon a quarter. It's a comparable quarter between 2019 and 2020. So it's based upon a quarterly loss comparative to the previous year. And Daniel, correct me if you understand it any different.
Yeah, the only difference is, and I agree with that, that's the traditional rule. The only times that it deviates from that would be if you weren't in business for all quarters in 19, or again, if you started your business in January or really before February 15th, 2020. There are alternate calculations that come into play where you may be able to choose quarters. But if you were in business all of 19, all of 20, you've got to compare quarter to quarter. Again, unless you're going to use annual tax returns. If that's the case, then you're looking at a 25% drop as shown on the return year over year. So you could use a 12-month calculation if you're submitting your tax returns.
Gotcha. Thank you.
Yeah.
Next slide, please. Some additional criteria on the eligibility. We talked about you got to use the first draw PPP loan amounts. The funds have to be dispersed before the second PPP loan draw is dispersed. Again, no more than 300 employees. And Ken, we talked about this, a 25% reduction in gross receipts between comparable quarters in 2019 and 2020. Don't think we have anything much more to add to that, Dan, unless you do.
Well, I just want to draw close attention to, I mean, your first bullet says it exactly right, Greg, that second draw can't be dispersed until everything's going to be used out of that first draw. So you can't go for a first draw and then a week later apply for a second draw. It's just mathematically not going to work based off most of the projections that we've run. So you need to be mindful of the timing of those two items, especially when you look at covered periods lasting anywhere between 8 to 24 weeks. And a covered period, for those on the call, that's the time frame of which you have to use your maximum loan amount for the eligible expenses that we discussed earlier.
Okay. Thank you, Dan. Next slide, please. Some updates about the Economic Act. The EIDL advances at one time were reduced from your PPP loan for forgiveness payment. Under the new legislation, if you receive an EIDL advance, those are no longer deducted from it. You don't have to do anything. SBA will repay you if you did have it deducted from it. That's taken into consideration, and you will receive a credit back because of that. Another thing that's important, and I know Dan will have something to say about this, the PPP loans are not taxable income, and expenses paid for with the PPP loans are now tax deductible. We're going to refer you to the IRS or to Dan to get a little bit more specific, but as far as SBA is concerned, those are now tax deductible. Let's see, expandable forgiveness expenses, we talked about that earlier. Now, there is in place now, it said coming soon, but it's already in place and it's on our website, a simplified forgiveness application for PPP loans less than 150,000 and under. That's already in place with a lot of new forms. I saw a chat question come up about where can we get the applications. If you go to our website, again, sba.gov/COVID, or just SBA general website, you'll find application forms online for you to apply for. Dan?
Yeah, all I'll mention is on that 150 or under the simplified application, just keep in mind, you do have to make certifications that money was spent as it should have been, so on and so forth. And those still technically are subject to review if there's suspected misuse of funds or the loan amount was incorrect. So just be mindful of that as you're completing this simplified form.
Yeah, the SBA does always and will always reserve the right to review any and all applications for any fraudulent activity that may be available. So that is a very good statement. Next slide, please. What you do now, contact your lender. These are PPP loans are through your lender. So you have to have a lender participate. You can use our lender match program. That's available to you. It's been very active. I've been very successful for that. And again, you can visit the SBA PPP site for the most up-to-date documents. And that's something that's, again, I want to refer you back to that site again and again, because that's where you're going to get the most up-to-date documents. As Dan and I both know, and I'm sure Dom knows it too, that it's a constantly changing regulations and FAQs for our programs. It's been going on since the first round. So it's something that check it every morning when you get up. I'd be the best suggestion. And contact our office. If you need some assistance, contact us. We have a staff that's readily available and willing to assist you with anything you can. Subscribe to our newsletter, and you can again follow us on Twitter. But down below, you'll see my contact information. You can dial that number or go to our website and sign up for the email. We'll be glad to assist you any way we can. And our partners here at MBDA and with Dan and Dom, we really appreciate the support that you've given us as far as working through this long process. We did in 14 days what we typically do in 14 years as far as PPP funding. So you can imagine the challenges we've had just managing the applications. So Dan, I'll turn it over to you for the next segment. If you've got any questions, I'll be around to answer them.
Excellent. Thank you so much, Greg and Daniel. I know that you have some additional things you'd like to share. And as you get started, I just want to make you aware that we do have at least 3 questions in the chat box about the EIDL. People are wanting to know, is the EIDL loan forgivable?
And Greg, I don't know if you want me to answer that. I mean, the advance amount, which I think was capped at 10,000 originally, and then 1,000 per employee, or maybe it was a flat 10, that is going to be forgivable, and it's not going to reduce your PPP money based on the new guidance that was passed. And Greg, jump in if I'm saying something wrong on that.
The actual loan itself is not forgivable.
That's right.
It is a loan up to 25 years. The loans are for up to 2 million, but by Congress's or by policy, SBA restricted them to 150,000 max after the first few requests. But the loan itself is a loan, and it's in place for 25 years at a low interest rate. But the advance is definitely a grant. It is a grant, so it is forgivable.
Yeah.
Thank y'all.
All right, so just a couple of things I want to point out before we jump into no loss deductions. As Greg mentioned in one of the slides, and I just want to draw your attention to this as well. He mentioned that loans can be increased if on this first draw. Those that are eligible for that, don't think everybody can run out and increase their first draw. It's very selective. It'd be any eligible entities that returned amounts or did not accept their full amount, which I doubt is very many on this call that would have done that. Partnerships that did not submit for partner compensation, as I mentioned, they were grafted in later. You can go back and get an increased amount. And then seasonal employers, there was a change to the calculation, which may increase the amount of available PPP money. That would be who would be eligible for an increased first draw amount. So just wanted to mention that before we get going. I also want to mention when Greg says that this is changing, it just continues to evolve. I've mentioned this to various groups that I've gotten to speak to. If you go in and search a question in Google, you have to be very careful which dates you're looking at as far as the information, because what was released in April is different than what was released in May. What was released in May, there was differences based in June, and then so on and so forth. So just make sure the guidance you're looking at is the most relevant. One thing that relates to is here, no loss deductions, and you can go ahead and advance the slide. So one of the big questions has been, what's the IRS going to do with the forgiveness piece? So we received a loan in 2020. We've used all of our expenses for eligible dollars. We have either gotten SBA forgiveness approval, or maybe we're in the process of getting forgiveness approval, or maybe we're planning to file here in the next month or two. What's the effect on my tax returns? Well, I just want to be clear, because this has been a point of contention, and we think we have guidance congressionally. Now we're just waiting on the IRS to come forward with their guidance. But what we do know is that in the original CARES Act, it very clearly said, the first point says here, forgiveness of PPP loan amount would not be taxable income. So we've known that since day one. The issue is that when we look at the IRS notices and revenue rulings that they released more midsummer to late summer of 2020, they said, yes, we agree with Congress that this will not be taxable income, but since it's not taxable income, whatever is forgiven, whatever dollars are forgiven of your PPP loan, if those dollars were used to pay for payroll expenses or mortgage interest or lease expenses, rent type expenses, then those expenses would not be deductible. So it's basically saying we're going to deny the deduction. What Congress has done in this Consolidated Act that was passed on December 27th is they said, look, PPP forgiveness is not only not taxable income, but it's also not going to reduce your expenses, which is a win for the taxpayers, because that means that this money that they received is not going to be taxable income, and then they can take the deductions that they use this money to pay for. So that's a good thing for our taxpayers. If I give you any caution, if you own a company that's organized as a partnership or very specifically as an S corporation, there are still unresolved issues that deal with partner, member, or shareholder basis. So the question is, if we take a deduction but we have no income, Is that going to wipe our basis out? Is it treated as debt at year end? If we haven't received SBA forgiveness, or be treated as the act says, basically as tax exempt income. Those are all items we're just waiting on specific guidance. How is IRS going to treat this? But what I will say is, if you've gotten your forgiveness before year end, I can pretty confidently say that that income or that forgiveness is going to be treated as tax exempt income on the tax return, and you will be able to deduct expenses. So that is a positive win for most everybody on the call. You can advance the slide. And just want to point out, I'm running a little short on time for our section here, but this is related to the PPP and is extremely time sensitive. It's this employee retention credit that now is going to be eligible for 2020 and 2021. So if you advance the slide, that would be great. And I'll just mention, as it's advancing, the ERC credit, or the employee retention credit, on the front end in the CARES Act, if you received the PPP, you could not also get ERC credit dollars. That has now been changed based off this act that was again passed late in December. If you have eligible dollars or eligible wages, qualified wages that have been paid out, and you meet certain eligibility requirements, what you see listed here, you were subject to operational shutdown or curtail due to government order, or if you had a gross receipts drop. When we look at your 2020 quarters as compared to your 19 quarters, where we had a drop of at least 50% in your gross receipts, then you may be eligible for this ERC credit. You can see here in qualified wages that basically these are wages paid after March 13th of 2020 through year end, but you cannot use the same wage dollars for both PPP forgiveness and ERC credit. So if you got your PPP money in April or May, there's going to be about an 8 to 24 week period there where maybe you have wage dollars that aren't going to count both ways. But if you have a reduction, just know that this credit that we now can go back and get both PPP and ERC for, if we have enough qualified wages, is 50% of wages up to $10,000 per employee. So that's a $5,000 credit per employee. What you guys need to know, and we'll look at this in a minute, this is going to be done on the fourth quarter filing of your 941s, which is due at the end of this month, I believe next Friday. So this has to be done by January 31st of 2021. I can tell you through our discussions with ADP, they wanted this by January 15th. So if you have a payroll provider and you think you may qualify for this ERC credit for 2020, you need to get them on the phone now and figure out what's the maximum dollars that are in play credit wise for both PPP and ERC. And if you'll advance the slide quickly, I'll just give you one more plug with the employee retention credit. It was extended and now is available for 2021 as well. What you'll notice is that the comparable quarters, when we're comparing 2021 quarters back to 19, it's not a 50% drop in revenue. You'll see under that first bullet, it's actually a 20%. So there'll be more people potentially eligible for the ERC credit in 2021. Special rules for number of employees, like in 2020, if you had less than 100, your all wages qualify, it jumps to 500 employees in 2021. So they're just expanding the availability of the credit. One of the nice bumps as well with the increased credit is it's up to 70% of qualified wages up to 10,000 per employee per quarter. So folks, make sure you get that, because this thing's running through June 30th of 2021. That's 2 quarters. That means right now the max credit under ERC for 2021 is not 5,000 per employee, but 14,000 per employee. So you just want to make sure you're aware of the credit, see if you qualify. The last bullet just mentions again for 2021 that wages used for ERC cannot be used to obtain PPP loan forgiveness. So you got to make sure those paths do not overlap too much, or otherwise you'll be picking which ERC or PPP is most beneficial for you. So just wanted to point that out. Thank you so much for having us, and this has been a blast. Thank you.
Excellent. Thank you so much, Daniel. You want to continue on? You have a couple.
Oh yeah, I've got this last slide. Let me just mention these dates real quick before we turn it over to Dom. Again, it's got a new PPP loan date deadline. We've got the second draw date deadline, which both are March 31st, dealing with the PPP. The ERC, you'll see there on that lower left-hand side, if it's a 2021 credit, you've got to have those wages paid by June 30th of 2021. It's a hard cutoff. That's our first 2 quarters. In the upper right-hand side, where we're talking the look back, the 2020 ERC credit, that's where it mentions the 941 that's got to be filed by January 31st, so next week. And there's some play with the FFCRA payroll tax credit that comes into play as well. That was extended as a part of this act, but we're not going to get into that today. I think that's kind of outside of our scope.
Excellent. Thank you, Dan.
Yeah.
And I do want to ask one more question because I keep getting variations of the same question. And then we're going to move forward with Dom. So the question is, how can sole proprietors and independent contractors show a 25% reduction? What documents do they need? Now, I know that you said that previously, but what I think they really want to know is like, how do they get that information? For example, if they have a bookkeeper, then the bookkeeper should be able to run their numbers quarterly so that they can see that decrease. Correct. So will you be very specific about what documentation and exactly how they show that 25% decrease? How can they show that in a satisfactory way?
So, and again, Greg, you jump in. They're either going to be providing bank statements, or they're going to be using their 2019 Schedule C as compared to their 2020 Schedule C, which again may not be done at this point. They're going to have to get that information into a tax return to produce a Schedule C to show this 25% drop.
Dan, they can also use some internal financial statements if they want to
Yes.
certify those and sign those also. Yes, but they're right on with that.
Yeah, and what Greg said is extremely important. He's exactly right. If you're producing QuickBooks reports that are internal, you've got to sign off, and Dom may mention this in a minute. I'm not sure if it's in his slides, but I think you have to sign off on each page that you're certifying those numbers are actually correct by quarter.
Okay, excellent. Thank you so much for that clarification. Now, up next, we have Mr. Dominik Mjartan. Mr. Mjartan is president and CEO of OPTUS Bank, South Carolina's only minority-owned bank. He graduated summa cum laude and a Dunahee Scholar with a BS in Management from University of Arkansas, Little Rock. He earned an MBA at the University of Ulster in the United Kingdom. After a progressive career at other financial institutions, including Southern Bancorp, Dom came to OPTUS Bank in 2017. Under his leadership, OPTUS Bank reached over 100 million in assets, up from 47 million, while returning a consistent profitability over the past six quarters. So Dom, I am now turning it over to you so that you can help everybody see exactly what that bank process is. Dom?
Great. Thank you so much, Tijuana, and thank you for the great presentation by Greg and Dan. I certainly appreciated that. So what I'm going to try to bring to you is a perspective from your position as a potential applicant for PPP. And we will use OPTUS Bank as an example of what that process looks like, but most financial institutions have very similar either technology or similar process. And of course, the rules, as Greg and Dan pointed out, are the same and have to be applied uniformly. But the process may differ slightly, but the general pieces that I'm going to show you are the same. Also, I will try to talk about the timelines. We're getting a lot of questions from customers about the timelines, about, you know, what happens if I apply on this date, when do I hear back, what's the next step, when do I get my money? So I'll talk about that. And then finally, I do want to make sure you know we have my esteemed colleague and a leader of the PPP process at OPTUS Bank with me, Ms. Brenda, and so she's going to comment as I go along and help me make sure I don't miss something, and also add her expertise and experience dealing with almost 500 applications that we're currently processing. Next slide, please. So let's start with the beginning of the process. I saw several questions in the Q&A section about, great, where do I apply? So you heard Greg talk about most banks in our market generally have either done PPP loans for their customers or are currently doing them. So what I would encourage all participants here is to go to your primary banking institution where you currently bank. You're more likely to get a personalized assistance, and you're more likely to get a response. If you're not getting a response, or your bank or credit union or a loan fund or whatever financial institution you have a relationship with is not accepting PPP applications, you can use the SBA resources that Greg pointed out on the lender match. We actually have received a lot of applicants that reached out to us. One, they know that we're a minority bank and a community development bank. So they're expecting us to be a little more responsive to their needs, especially if they're a small business that needs a little bit more assistance. So I do encourage you to start that process now, start that process quickly. And then we will talk about, and my colleague Brenda will talk about specifically what you need to get ready for that, so that you don't get stalled in your application. So what you have here on the screen is our portal, optusppp.com. We are accepting applications in the first round. Last year, we processed over 511 and funded over 511 applications totaling over $40 million. Most of our loans went to minority and women-owned businesses. We're very proud of that. We were very intentional about making sure that small businesses get served and don't get left out. Our median size was under $20,000. So if your business is small, don't be shy. Don't assume that you cannot apply. There are a lot of lenders like OPTUS Bank that will serve you regardless of your payroll, regardless of how many employees you have, or if you're a sole proprietor or a single member LLC, we will still serve you. And there are many other great financial institutions out there that are really trying to help everyone regardless of their situation. Next slide, please. Okay, so some of this is a little bit duplicative from what was presented before, but we'll share this with you. And what we highlighted there, and I'm going to ask Brenda to comment on it, since she's accepting a lot of these applications and assigning them to our processing team. Most of the applications that we've seen recently are self-employed individuals, independent contractors, and sole proprietors. And in that case, that process for first-time applicants is pretty simple and mirrors what it was last year. So Brenda, I'm going to see if you would please describe any requirements that you're seeing as necessary, and also what you see as customers are not providing and should be providing.
Sure, certainly. Thank you, Dom. And thank you, Greg. And he's gone. Dan, thank you. You guys have provided actually a lot of excellent information that's talking about what is needed. And I've seen the questions too about if I have a 1099 or, you know, a W-2 and so on and so forth. So you do not have to have filed your 2020 taxes yet. We know it's January and most people haven't filed their taxes. If you filed your 2019 taxes and you want to apply and show your 25% reduction, you can complete your Schedule C and you certify that the information that you're completing, that you're submitting, is information that you want to use to show that you had a 25% reduction. Your Schedule C is the most simple way to provide information regarding what your gross income is, what your net income is, because we look at, if it's been filed, we're looking at your yearly, but you can absolutely use your quarterly, and you compare quarter to quarter. So if you use the second quarter of 2019, you're going to use your second quarter of 2020. If you use the last quarter of 2019, you'll use the last quarter of 2020. I think I saw someone say that I was only in business the last quarter of the year, so that's all I have. Well, that's fine. Use what you have to prove that you had a 25% reduction.
Great. Thank you, Brenda. Next slide, please. Okay, for new customers, and we are seeing some new borrowers, those that did not apply last year for whatever reason, we want to make sure that we build awareness in our communities that they can apply, and that process mirrors to a great extent what it was last year. But there is a few more documents that we need to collect. I will also make this recommendation to you. If you did receive a PPP loan last year from a financial institution, it will be probably the easiest process for you to go back to that financial institution to apply for your second draw. We'd love to serve you. Feel free to reach out to us, but we also want to be helpful to you. And I think the SBA, and Gregg can comment on this too. The SBA does recommend if you receive the first loan from a financial institution, it may be the easiest thing for you to go back because they already have your BSA AML information that we're describing on the slide. They already should have it on file, and that process should be easier for you. But if you didn't have a good experience, you want to reach out, try a different lender, you are absolutely allowed to do that. And we have actually received some. In fact, the first loan we funded was a second draw applicant that wanted to do business with us, came to us, and we were able to process and fund them in about 3 days. Next slide, please. Okay, I'm going to ask Brenda to also share some comments, and she's helping us really navigate the flood of applications. And you can see the key aspect we already covered is that 25% drop. There is a lot of confusion, and I really appreciated Dan talking about there are certain circumstances. If your business was not started until February of last year, there may be some complication in how to calculate that. We're happy to help you work through that if you have that need. But for second draw applicants, that process is fairly simple as long as you can demonstrate that 25% drop. Brenda, do you have anything to add or clarify, please?
That's perfect. No, that's perfect.
All right, next slide, please. Okay, so we will just quickly walk you through our application portal. And again, we're using our bank as a sort of a demonstration of that process. I know some of the banks use very similar tools and portals, but it will tell you what that process looks like. Also, at the end of our slideshow, we will talk about some basics to make sure that you maximize the chances of not just getting through the process successfully, but getting your funding as quickly as possible. So please do pay attention to some of those tips that we'll share, and Brenda will go through those for us. So key components of the application is your basic business information. Next slide, please. If you have any additional beneficial owners, meaning there are other parties involved in the business, this is where you would put their information, detailed information. Next slide, please. On this particular tool that we have, it's very, very helpful to our customers. It highlights what's missing. And I can tell you that there are a lot of frequent issues that we find that our customers or applicants skip certain steps or upload documents that are incomplete, and that really harms the process. It really slows it down, and we have to go back to them, and ultimately delays the timeline for them to get the money. So we really encourage everyone, if you see any red fields that are highlighted, that means you're missing something critical, and the application will not let you move forward. One key question that you need to answer: if you did receive a loan in the last round, we do need your SBA number. But the way we built our system, we are able to pull your old application up, pre-populate it, and make that process a little simpler. Brenda, do you have anything on this this step?
So Dom, because this is our system and we're demonstrating it, I just want to point out that you can see at the top of the screen, there are some sections that look kind of burgundy and some look bright red. If the sections that are bright red are sections that are not complete, the sections that are burgundy, that tells you that those sections are complete and it's ready to move forward. If you have something that you're missing, and what we found is there's some areas that the applicants are missing, and I'm not sure why, but one of them is your industry code. You have to have the industry code in there, and that actually helps because we have built-in calculations, but that helps to calculate what your loan is. Is it a 2.5% loan or a 3.5% of your income? And again, I think Dan pointed out and Gregg pointed out, if you are a combination of restaurant industry, 72, then it's 3.5. If you're not, it's 2.5, but you can't just decide, oh,
You're muted, Brenda.
I'm sorry, you can't decide that you want to put the 72 industry code in there because it'll allow you to get more money. because everything that you do is tracked, and it looks at what your industry is, and it's like that doesn't fit, so you have to take it out. So just want to make sure that you complete it with the OPTUS application, and then at the end, it shows you submit. Make sure you submit the application. It'll say, congratulations, your application is complete, but you want to make sure that you submit it. But that's just a little tip on how you can determine how you're tracking if your application is being completed properly.
Yeah, thank you, Brenda. And just to clarify, the NASIC code that start with 72 do qualify for 3.5 times their average monthly wages versus the 2.5. So that is a very good feature that was intended to really help the most hard hit industry, which was primarily the restaurant and food service industries. Next slide, please. Okay, this is the view that we have in the processing, but we're finding a lot of customers upload documents that are incomplete, and there's not a lot to upload, but we do encourage our customers, and this would apply regardless of which financial institution you use. You're certifying that the information you're providing is correct. And Dan pointed out one example. If you're using your self-prepared financial statements to show your quarterly 25% drop in revenues or in gross receipts, you're actually required to physically certify every single page, put your initials on that page, and then scan it and upload it to us. And our obligation as the lending institution, which we take that obligation extremely seriously, is to actually verify that that documentation is there. And if you don't have it there, there's a lot of back and forth that you could lose valuable time that you could get your funding. So we don't assume when you upload something that is done. Know that we're going to review it. Brenda and her team is going to review it extremely carefully. And then also some lenders allow you to waive that documentation if you're applying for less than $150,000. We do not, because we don't want to put our customers at risk of not having that forgiveness down the road. So we're actually requiring every single customer to document and certify that they did experience a 25% quarterly drop, or if you don't have quarterly, you can do it on an annualized basis in certain circumstances. Next slide, please. And this is what Brenda talked about. We do find a lot of customers are so delighted to see that completed screen that they forget to hit the submit button. And we cannot hit that button for you because you're certifying that that application is correct by submitting it. So please make sure if you're using our portal or if you're using another bank's portal, make sure that you get that confirmation. I know we're running tight on time, so let me skip to the next slide real quick. And we will talk, I will ask Brenda to walk us through these quickly. One point I would make is most lending institutions that are helping with this process are extremely busy. So know that if you receive a confirmation, that means they're working on it. Feel free to reach out to us, but we're getting a lot of requests from customers. Hey, did I submit my application? And we tell them, yes, you did. And then when will I hear back? And so the way we're currently processing it, we're trying to look at every single application, verify. If it's perfectly completed and all the documents are complete, it goes straight to our processing team, our quality control and compliance teams. And it is submitted, Brenda then submits it to the SBA. And it could happen as quickly as 3 days. We've done one in three days. The SBA then reserves up to 2 days, I believe, to review that application. So don't assume once you've submitted it to us that in 3 days you're going to get your money. It does take a few days, and then the SBA is now reviewing these applications versus last year, the approval numbers were issued automatically. And so it does take a little bit longer. So we do ask our customers to please be patient. Know that we have not, in my history, in our history last year, we have not missed a single application. If you complete an application, you got your money. In most cases, unless the money ran out like it did in the very first part of the first round. But we are processing. We're not going to miss your application. We will reach out to you, but make sure that you do everything to complete it. Okay, Brenda, if you could hit some highlights from this, from your experience,
Sure.
that would be real helpful.
Absolutely. So I just want to say, make sure that you look at the application. I think probably one of the best things to do is to review what the guidelines are based on your type of business and gather your documents before you begin your application process. Make sure that you look at everything that has an asterisk because it's a required field. There are some optional fields. If you don't want to fill those out, that's fine. But anything that's required will cause your application to be delayed. There's some self-help tools that you can use at optus.com, but also in the application itself. So when you're completing that application, there's some hyperlinks that you can click on that tells you how this is calculated, why this is required, and so on. You want to make sure you take a look at those. Review the application very well before you submit it. If there's a form that needs to be submitted and you don't have the form, don't just put something in that space. Like if it says we need your driver's license, don't put your tax form in the slot for the driver's license. It will allow you to upload it because you're uploading something, but when we get it, it's going to be the wrong information, and so that delays your application. Make sure you're not just putting something out there to have something filled in. I've already mentioned at the top, the section lines for the application. If it's dark red, that means it's complete. If it's light red or bright red or it's not all the way across, there's something that's missing. Make sure you remember to submit your application. As Dom has mentioned, we can't submit it for you. When you submit that application, you're certifying that the information is correct. So it's an easy process. And I think it's probably in my lifetime, not that I'm so old, but in my lifetime, I've never seen where you were actually able to get free money. And it feels like free money because it's forgiven if you use it properly. So I encourage anyone, a small business, if your income is only $1,500, your total income, that's something to apply for. If your total income is millions of dollars, as Dom has said, apply. I encourage all small businesses to apply. You have criteria, so look at the criteria and make sure that you qualify.
Thank you, Brenda. But Tijuana, that concludes our presentation.
Excellent. Thank you so much, Dom. And thank everyone. But we're not quite done yet because I know there are tons of questions. So if we can go to the next slide, Tiffany. So what we're going to do now is I'm going to go ahead and start asking some of the questions, and we would invite everyone to stay on as long as they can so that they can have their question answered. And I like to go straight to Dom and Brenda. I get this question a lot. Where do I find my application? Can you help people understand how they start that process that is not necessarily or maybe it is an application that you actually fill out, or is it a more electronic process? Even if they are not your customer or they're not applying from you, how do they get started with the process? Where is that application?
Well, I can't speak to every financial institution, but I know most that I've seen have portals, just like we have, very similar to that. Our portal has login information, so you can start it, go to optusppp.com, start that application. You can log back in and keep working on it. So it's not a one-time deal, although as Brenda pointed out, it's better if you have all your documents up front. But look at any financial institution that is accepting applications and see if they have a portal. What we do tell our customers is please do not fill out paper applications and email them to us, because we will not process them. We have the portal, which is much simpler. And if you have everything together, it literally takes 10 minutes or less to apply and upload your documents, click submit. And if it's in good order, then it moves forward very quickly.
Okay, excellent. Thank you. Here's another question. And let's speak specifically for sole proprietors or anyone completing a Schedule C. They want to know if they had a zero profit or if they took a loss on their Schedule C. Are they eligible for 2019 or 2020 PPP?
No, they're not. You have to show a profit.
And Dan, correct us, but we look at the line 31 on Schedule C. If that line is zero or negative, there's really nothing we can do. Is that correct?
That is absolutely correct for both years.
Okay. Excellent. Here's another question about the 25% decrease. I understand that there is a requirement to show a 25% decrease in revenue, but our business has increased because we literally just got started. Are you aware of special exemptions that can be made on a case-by-case basis?
I'll answer that. Right now, there are no exemptions qualified. We are looking at it from the overall regulations that Congress passed, and we have to adhere to that. So no special exceptions at this time. And I want to go ahead and jump in here and say that with help of the applications, if somebody's having problems putting applications in to your lender, MBDA, SBDCs, your Women's Business Center, your SCORE chapter volunteers, those individuals and those entities are eligible and really willing and able to help you with your application process.
Excellent. Another question, if a business has closed, and I'm assuming due to coronavirus, is it still eligible to apply to recoup losses?
So my understanding is if you're closed down for good, you're not eligible to apply. If it's a temporary shutdown, then you may be able to apply.
Okay, excellent. I have 1099 contractors for my business. Can I request funds for them?
No.
No, they have to apply independently for themselves.
Okay, excellent. If you are a son of a veteran, can you qualify for extra assistance, or do you actually have to be a veteran?
There's no specific preference for veterans as far as this program is concerned. Some of our other contracting programs through SBA, there are some preferences, but for the PPP program, there are no preferences at this time.
Okay. If you are working on a 7A deferment from your bank, can you still get PPP?
Yes, the two do not have any relationship, really. The 7A application and the 504 and the microloan applications, the 1112 payments are separate and distinct from applying for a PPP.
Okay. This question came in as a result of a conversation we were having, and I'm going to read it to you, and maybe we can understand exactly what he means and respond. He says, define different. Received 1099 versus issuing them and using those towards your borrowing amount. So I think what he's asking, are you, when you're considering your amount that you're eligible for, are you using the 1099 amount that you issued or the 1099 amounts that you've received?
So 1099s that have been issued by an employer cannot be included when trying to determine what you're borrowing, what you're qualifying for. If you are a recipient of a 1099, that is how you receive your independent contractor and you get paid on a 1099. You can use that 1099 as proof of income.
But for maximum loan amount, just to piggyback on what Brenda's saying, is still 1099 income less your expenses shown on your Schedule C. So just because I receive a 1099 that shows 80,000 of income on it doesn't mean my loan is based on an $80,000 figure per se. I've got to then back out whatever eligible expenses would have been on it. And I don't think we've mentioned this as well, just to be a good time to mention it. Your Schedule C income and your employees that you're using their wage dollars for your maximum loan amount is capped at $100,000. So if it's in excess of 100,000, you've got to back down either the Schedule C income or your employee income or wages that you're paying them.
Okay. What if someone only had W-2s for 2019 because of COVID, and they had none in 2020. So if they only had W-2s, would that make them ineligible?
So I'm assuming the company's issued W-2s. So the maximum loan amount on this first draw, second draw, on the second wave of PPP is based on 19 or 20. There actually is a third rule that you can use as a calculation as well. So if they issue W-2s in 19, but not in 20, then it seems like they'd be able to go back and use the wages based off their 2019 W-2s to calculate their maximum loan amount, if everybody else agrees with that.
Okay. If an S Corp has no employees, but paid subcontractors to complete construction projects, can that S Corp qualify for the PPP loan?
The answer is no. If they had no wages paid out of the S Corp, then they have no way to calculate a maximum loan amount, which makes this difficult for S Corps that aren't properly claiming wages, or their owners are not claiming wages through W-2s.
Okay. How long do I have to apply for forgiveness?
Currently, there's not a specific date. I think there was some talk about the December 31st, 21, but that's up in the air right now.
Yeah, what I'll mention is if you don't apply within 10 months of the end of your covered period, your payments start, at least based off current guidance.
That is correct, yes.
Okay, another question, I'm going to ask it again because it's still coming in the chat. We have an EIDL loan from the SBA. Is this loan forgiven?
No, it is not. The advance is forgiven, but the EIDL loan is a loan, and it is a termed out loan with a lower interest rate, but it is not forgivable at this time. Everything's subject to change, but but right now it is not.
Okay, I have a strange situation. Due to COVID, I could not do one of my programs, which is to provide instruction during the summer for rising kindergarten children who are at risk. I usually hire 4 to 8 teachers or more to help with these children. We also provide a salary and mileage to the teachers and supplies and materials to the children. This is an evidence-informed program. Due to budget cuts, I was not able to budget for it this year, for this year and fiscal year 21 either. Can I use these funds to be able to hire teachers and fund this program?
So I'll jump in and take a stab unless someone else wants to. So
Please do that.
as long as you had, again, as long as you had wages that were paid out in 2019, because you're saying in 20 you couldn't run the program because of budget cuts and other problems. So if in 20 you had eligible wages that were paid out, then you're eligible for a loan. Then once that loan's received, you've got to use that loan for eligible expenses. And we haven't even covered this. I mean, we have hundreds of pages of guidance on this. 60% of your loan, at least 60% of your loan has to be used for payroll costs within your covered period. And your covered period as it is defined now is either an 8-week period after your funds are dispersed or up to a 24-week period. So if you're planning to run that business in 2021 and you're looking for funding, it's going to happen some point in the next 24 weeks, then if you're eligible for a loan based off payroll paid in 19, you would receive your funding in 2021. You would have to use at least 60% of those dollars for forgiveness purposes in that 24-week period for these programs. If not, Greg, tell me if I'm wrong, if you're eligible for the loan, but then can't use the funds, then it just converts to, I guess, what is it, a 2-year loan with the 1% interest rate?
It's actually a 5-year loan now.
Or 5-year loan.
Yeah, with the 1% interest rate. And again, the purpose of the program was for Congress to rehire employees that are not working right now. So yes, you could, that would be in the rehiring of the employees that you have back and putting them out, getting them off the unemployment rolls.
Okay, thank you. Are you eligible to apply if you have delinquent student loans?
I'm not aware that that's connected in any way to the application.
Okay,
So yes, one point I wanted to make real quick, I was just looking at some of the questions. For businesses that were not in existence and did not apply in 2020, and Greg and then correct me, but you didn't apply, you're using not decrease of 25% to qualify, you're using your wages as the basis for the loan amount. Is that correct? You're using the first draw rules, the first time applicant rules versus the second draw rules to qualify.
So the wage base is going to be the same, except for, at least for a base calculation for first or second draw. It's just on the first draw, it's a 2.5 times wage base. Second draw is 2.5 or 3.5 if you're in accommodations or food. The 25% drop is basically the defined limit of, are you even eligible for a loan on the second draw?
That's the second draw only, right?
Yeah.
So I just want to clarify, make sure I didn't misunderstand it, but I'm seeing some questions about it. So if you didn't get a first time loan, just to clarify, if you didn't get a loan last year, then you're not reporting your 25% drop.
That's correct.
You're only focused on your wages as it was in the first round.
That is correct. Yeah.
Okay.
okay. So everyone, in order to get the second round PPP, you must apply, and it's still time to apply for first round PPP. So you have to get the first round PPP in order to apply for the second round PPP. So here's another question. Do you need to file your 2020 taxes to get the employer's retention credit, or you can get the credit by filing the 941 quarterly form and get it now?
The employee retention credit is going to be on the 941. It is not an income tax credit. It's a payroll tax credit.
That's right. Okay, great. For PPP from 2020, does the agency need to request forgiveness, or is it just for 2021?
Well, it's not the agency that's requesting forgiveness. The borrower is requesting forgiveness through its lender. So that's the process. It's not the agency. So the borrower would go and meet with the lender, working with them on the forgiveness form, submit that form to the lender. If the lender approves it, then he'll submit it and SBA will accept it. If not, they'll reject it and give you the reasons why.
Okay, do you have to apply for forgiveness for each round?
Yes.
Yes.
Would there be, or is the SBA offering any grants in this round under any of the programs?
The only other grant that's out there, which has not been put forth as far as the specific regulations, is this shutter venue operator grant, and that's Congress allocated $15 billion for that, $2 billion to go for smaller venue operations with 50 employees or less, and the rest to go to larger venues. But that is the only grant program the SBA right now is offering for smaller businesses.
And currently, if you get that grant, you're not eligible for PPP dollars on the second round.
That is correct. Thank you very much.
Can you apply for PPP loan if delinquent in paying taxes? Do you have to provide proof that you are on a payment plan?
Typically, if you're delinquent on federal taxes, it makes you ineligible for any SBA guaranteed or loan program. If you've got a plan in place and you're making payments on that, and you can provide that to us, that takes you out of the delinquent aspect of it, and they will consider it.
Okay. I've applied for round 2 PPP funding. I completed my lender's application, which illuminated a loan amount. However, I feel I need more funds to sustain my business because I've had to spend more funds on pivoting my business through technology platforms. What is your feedback on either requesting additional funds and or adapting my requested loan amount to account for this?
Dom, that's probably a good one for you to address if you want to.
Well, I know there is, so this may not address that particular aspect, but I know there was an opportunity to apply for additional funds in the previous round for those that qualified. But I'm not aware of any programs that would be to, increase the loan amount or apply for additional funds through the PPP program.
Tawana, if I understand his question, they've worked with a lender and they're haven't submitted their application to SBA yet, and they're looking at wanting additional funds. In my opinion, and Dom, correct me if I'm wrong, they really need to go back to the lender and negotiate with the lender if there's a need for additional funds, and if they can show the eligibility and criteria to meet for additional fund as far as the payroll criteria.
Correct. Yeah. And thank you for clarifying that, Greg. So if the application hasn't been submitted, you can still, if we're talking about the PPP, I guess that was my confusion. If you're talking about the PPP program, you can still, if you have additional documentation or different documentation, it hasn't been submitted. And that is a case that we are finding too with some applicants. When we review their documentation, we find out that the amount that they're applying for could be adjusted up or down, depending on the documentation that they provide to us. Now, if it's a few pennies, it may not make that much difference, but we typically go back to the customer and let them know that the amount that they applied for should be adjusted. Or if they provide us additional documentation, we have frequently adjusted the loan amount based on the documentation that they provided us.
But just to be clear, and guys, tell me if you think I'm off base on this. The maximum loan amount is based off a factual calculation. So once you reach your FAT pattern for your loan, you cannot increase it just because there may be additional need. It's based off of payroll from 19 or 20. Once you get to a number, unless what was used to calculate it was incorrect, you can't just artificially increase that number unless you're going through other lending practices by the bank.
Agree.
That is absolutely correct.
Yeah.
Okay, great. We are coming up to 5:25 now, so I'm going to take a few more minutes for a few more questions. I've asked a lot of questions, a lot of that the same question phrased slightly differently, and a lot of the questions were answered during the presentation. If you feel that I have not answered your question, if you would go ahead and send that directly to me in the chat, and I would try to get your question in. There's so many questions, it's kind of hard to filter through them. So please send it to me directly in the chat, and I will, or you can put those in the question Q&A section. Send them directly in the Q&A, and I will ask if you feel that I have not answered yours. Here's another question. On a startup business, the revenue stream is being used to assist with startup costs and reinvesting in inventory. Can you still apply for PPP?
Well, the business would have had to have been in service, or you'd had to have been in business on February, I believe, 15th of 2020. Right. So it couldn't be a startup in 2021. And again, the calculations really, unfortunately, this is not to shoot down the question, but it's not based on inventory or startup. It's strictly based off of payroll needs as far as getting maximum loan amount. Now, on the forgiveness side, there may be some differing FAT patterns that come into play on what the dollars can be spent for, but maximum loan amount is based off of payroll either from 19 or from 20 based on the borrower's needs.
Can a sole proprietor LLC who works daily at the business take a monthly draw and put it towards the forgiveness?
Yes, SBA has brought forth the definition of income replacement. So if I'm a Schedule C filer, obviously I'm not issuing payroll to myself, so that wouldn't fall under the qualified normal definition of qualified payroll that's being used, that you're using your PPP funds for. So if they're replacing their income for the year of which they sought the forgiveness or sought the maximum loan amount, so if it was based off 19, they basically just have to draw that money out during that covered period. Greg, tell me if you agree or disagree with that.
I agree with that, yes.
Okay, I applied for EIDL last year in March 2020. It took forever to process, but I received the loan in June 2020, but funds for the advance exhausted before my loan was processed. Can I apply for the advance?
There is no application for advance at this time. Congress has not allocated those funds. If and when that comes place, they'll notify you through our website and through press releases that the advance is open back up, but not at this time. Funds have been exhausted.
Okay, and yes, a copy of this recording will be available as well as the presentation. So I'll make sure to get that over to you all. It'll probably be tomorrow. I wanted to know how long, once the PPP has been entered in the system for review, would I look back about approval? Will I hear back about approval? Dom, I think you mentioned that.
Yeah, I mean, it varies on the financial institution, and it really is driven to a great extent by how complete and accurate that application is. If we have to go back and forth with the customer to clarify additional information, then you're waiting. You could be losing a day or two for each interaction and exchange, and then frequently the customers are not available. If everything is in perfect order, you know, we started processing last week, and we've already gotten several approvals and funding. So, you know, it should take less than a week in ideal scenario. But again, that depends on the financial institution, what their volume is, how their portal is set up. If the customer provided everything in a way that's quick to review, if there are no issues, you know, we do fund from a completed application fully submitted to the SBA, we will fund in less than 10 days.
Okay, thank you. Looks like I have two more questions and then we'll be ready to wrap up. What if the store was in business since 2008, but got a new owner in August 2020? Are they eligible for PPP? They do have fourth quarter 2020 earnings.
Dan, you want to handle that? Or you want me to?
I'll let you take a first stab, Greg. It's a little bit of a loaded question.
It's a loaded question. Yes, it is eligible. They would have to have documentation. It is substantially, the business stayed the same, did not change, and provide documentation, and the employees were retained based upon the previous documentation. But yeah, it is a potential.
Yeah, and the reason I said it was loaded before Greg gave his answer is because we've dealt with several companies where there's been it's been an asset sale, not to get into too much on business transactions versus a stock sale. So an asset sale will be a completely different federal ID number, completely different company that may play into PPP, who's eligible for it.
Okay, and we have one more question. I am a new business owner, opened October 2020. No employees, business making a profit. I'm paying taxes, etc., but I haven't taken pay. I meet several qualifications, but afraid I do not qualify. Who should I contact?
Number one, you're definitely not eligible for a PPP. But number two, if they want to contact my office, we can help them with some additional funding as far as startup business and some counseling as far as what they need to do going forward. But as far as the PPP applications, they would not be eligible.
Yeah, they'd had to have been in business as of February 15th, 2020. And if that's the last question, I just want to mention one thing if I can real quick. To go back to the very first question you asked about the negative or zero profit in 19 or 20, we are seeing from a planning standpoint, the bank may be seeing this as well. The nice thing about this second round of PPP is you may have a taxpayer who had a Schedule C in 19 that showed no income. They may not have been eligible for PPP money. You know, don't be downtrodden, because if you show income in 2020, then they can apply for a first round loan in 2020 or 2021 using their 2020 Schedule C. So they want to be very careful to make sure they know what's being reported on their forms and what may trigger eligibility.
Okay, one other question came through I want to ask quickly. Will the amount of your first PPP loan determine what your second amount would be, your second round?
If you use the same payroll figures, and which I think Dom has alluded to a couple of times with using the same bank, if you're using your 19 and 20 in the second round and use that same in the first, Dom, tell me if I'm correct, it's going to be pretty much the same loan amount.
Yeah, unless that, you know, they could use or should use different time period to
Yeah.
determine that. But generally speaking, most of our customers, they use the same amount because they use the same basis for their payroll, which was the highest when they applied in the first place.
Yeah. Or unless, I guess, they are accommodations or food and they're using a 3.5 times their monthly payroll.
Yeah, that would be my assumption, that if most of them would be applying would be the ones to be food services, because the restaurants are ones that we really are seeing come back in for second rounds.
And that code that we mentioned, that 72 code, that is going to be on your Schedule C. For sole proprietors, that's going to be on your 1065 for partnerships, and it'll be on your 1120S for S corporations.
Okay, excellent. So I want to thank everybody. That wraps up our program. But before we go, I want to take another moment to thank our speakers, our sponsors, as well as the team that is working so hard behind the scene. And I want to call her out. That is Miss Tiffany Flood. So I thank you all. And of course, everyone knows that this event would not be possible without you. Also, as you may be able to see, that's on your screen now, is that we will have another webinar coming up on February 2nd. This information is going to be for directly for business owners who do not have employees, for the self-employed. So all of the things that you would like to know, all the questions that you have specifically, if you will attend this next webinar, you would get those answers. So again, I want to thank everybody. Thank you all for your attendance. I hope you found the information here beneficial, and hope to see you at our next webinar. Everyone, have a good evening.